Hi, are you a working professional looking to accelerate your journey to financial freedom? Welcome to this presentation by SmartWealth.ai. In this, we are going to discuss our product portfolios that will help you accelerate your journey to financial freedom. When I was in my mid 30s as a working professional, I was looking for accelerating my journey to financial independence, and I saw only fragmented solutions around which were very high risk, poorly diversified, and were missing out on alpha. There were solutions that would give you sporadic wins, but they did not have diversification. Those that had diversification did not have asset class balance to tide over multiple market regimes. Those that had asset class balance simply did not have enough alpha to accelerate the journey. And I felt that solutions were actually bits and pieces of the overall puzzle, not exactly a solution for the entire puzzle of accelerated financial independence. That is why I decided to solve this puzzle myself. And we solved this puzzle using our framework called Diversified Momentum Investing. This essentially has 5 levels of diversification for serving 4 types of investor personas using 3 strategy pillars. If you want to see more about our genesis, about our journey and genesis of diversified momentum investing, do check out our main video on the home page. But for now, let's get started with diversified momentum investing, which has 5 levels of diversification for investor personas using 3 strategy pillars. These are those 3 strategy pillars. One, stocks portfolio as a pillar, assets portfolio as a pillar is 2, then 3, factors portfolio as a pillar, and then combination of these. Diversified assets portfolio. This this allows you to participate in asset class balance strategy by way of ETF. This is a low churn strategy, and you can invest up to 10 lakhs in this. Let's see how this strategy will respond to the changes in market regime. So in a bullish regime, you may see most of the allocation is made to the equity ETF and a very small portion to the debt ETF. When the market becomes little less bullish, you may see the equity allocation is reduced and debt allocation is increased. When the market becomes sideways, very choppy, then you may see that gold has been introduced, which is negatively correlated to equity, to be able to control the portfolio volatility. And when the market becomes bearish, we may completely come out of equity and participate only in gold and debt. And when market becomes very bearish or is in a state of crisis, we may move most of the allocation to debt, to gold. So this is how it responds to the market regime changes and deliver high risk adjusted return, and thereby consistently beating market over a long period of time. The objective of this is really to be able to beat the market with low volatility, low effort, and low churn. The core allocation decision of this portfolio is made using Markowitz efficient frontier principle. And the use case of this is you can use this as a standalone strategy, or if you have a stock portfolio, you can add assets portfolio to be able to add some element of diversification. The universe of this is it has equity, it has debt, and it has gold. So gold and debt ETFs are self-explanatory. In equity universe, it has 2 factor ETFs, which is alpha ETF and low volatility ETF, as well as Nifty 50. So within this universe of 5 ETFs, it chooses in the right proportion based on Markowitz efficient frontier principle. If you segregate these 5 ETFs, you will see 3 of them are asset class and 2 of them are factors. So alpha and low vol are factors, whereas remaining are asset class related ETF. So it maintains 50-50 balance between assets and factors. The optimization of weight among factors and among asset classes is done using mean variance optimization. It has an embedded element of gold and diversification. Execution is simple. It's reviewed once every alternate Thursday, which is once fortnightly, and the first Thursday of every month is the right time to apply capital to schedule your SIPs. You can invest up to 10 lakh rupees in this portfolio. On our website, you will see a lot more detail about our products. You will also see very informative blogs, FAQs, and testimonials. If you have any questions, do not hesitate to reach out to us. Our contact details are here. Thank you for watching, and we hope to see you soon.